Plus, President Trump tells top retail executives a tax overhaul plan is coming soon. We'll discuss that and more with Mortimer, CEO of Marvin Traub Associates. Next, this is Bloomberg.
Now, President Trump waving all this off, though, met with executives of the major retail chains on Wednesday. He promised them that he would submit a tax overhaul proposal soon. The bosses of these companies, including Target, JCPenney, and Gap, came to Washington to discuss their opposition to the Republicans' border adjustment tax plan that aims to tax U.S. businesses' domestic income and imports while exempting their exports, saying that it's going to raise consumer prices. Well, joining us now is Mortimer, the CEO of Marvin Traub Associates, a business development and strategy consulting firm focused on brands, retailers, and developers. So, Morty, great to see you.
Good to see you too. Thanks for having me.
What did you make of Trump now surrounding himself with the latest fashion?
Well, you know, all the retailers in the house. I think that one thing that they are obviously concerned about is being net importers with this new plan causes some issues. And if you look at it through the lens of the fashion space specifically, right. If you remember back to 2011, because of the lack of supply of cotton, we had $2 increase per pound of cotton, which caused the fashion industry to go into a huge flurry to try and figure out what to do from sourcing and changing their dependence on only cotton, blends, etc. Just that alone caused the imports and the prices of those clothing materials that were sold to the U.S. customers to be hugely impacted. And if you think about a 20% potential import duty on everything can cause American retailers of all shapes and sizes, not just the fashion retailers, to be affected.
And it sounds pretty, I mean, it sounds pretty dramatic. I mean, do you think the retailers are preparing for this at all? I mean, he seems pretty serious about putting this through.
I think they are absolutely preparing for it. I think depending on, as you know, as we said earlier, between different horses for different races, the luxury guys I think will be okay. They have a lot of margin to play with. When you look at the bottom end of the spectrum, though, with people playing with far thinner margins, the discounters, the Gaps, but even Walmart. I mean, it imports a lot of products, and Target. They operate off razor-thin margins, and so dealing with that is something they have to worry about. That said, there's potential for strengthening of the dollar, which could counteract some of this, which economists point to, that it's not dissimilar to a VAT in some ways, even though this is not a flat tax across all products, because obviously it depends where the product has its provenance from. So it's different.
Okay, let's talk about the retail sales numbers, though, that came in this morning. Much better than expected. I mean, are we, what kind of era are we entering into with retailers?
Well, we're entering into an era where the consumer is actually very well off. Think about housing prices, the stock market all-time high, the tax benefits coming through, oil prices are low, so it doesn't cost them a lot to get to the mall. Across the board.
Despite what's going on in Washington, though?
Yeah, I think they are feeling relatively good. The difference is which kind of retailer are you? If you are selling more experiences, if you are selling restaurants, if you're in the hotel business, you're getting a big uptick in your visitation. In fact, it's the biggest single increase across the board for the last few years has been hospitality-driven retailing, restaurants, etc. But on the other hand, if you are doing it the same way as you've always done it before, and you're selling things, Americans have a lot of things, and so it's an interesting problem that retailers have to face now. They're not just about selling products, they got to sell experiences.
Right, and that's why companies like Apple, for instance, are their stock continuing to hit record highs here. People are just buying up their products like anything. But then you've got the department stores. Macy's, right? I mean, then you've got the struggle. So what's going on that end? Well,
you have the struggle, if we want to call it that. I mean, people have been calling for the demise of the department stores since the 80s. I mean, every 5-10 years, the department stores. But you have to remember that these companies control some of the best and most powerful real estate in the greatest cities in this country. And not only that, they own or lease it at 3% of sales. If you want to take a store on a street, it's at 15-20% of sales. So ultimately, if they can change and pivot themselves into maybe a more Asian or even European model, which is more concession versus own bought, which means buying wholesale and selling retail, there's actually quite an opportunity for them to repurpose some of that real estate and recognize they're not just in the retail game, they're also in the real estate game.
And morning, it's Yvonne in Hong Kong. I just want to, interesting to kind of flesh out this battle between the net importers versus the exporters in the U.S. It's been a lot of ongoing conversation about GE versus Walmart. But if I was an Asian retailer, like a Uniqlo right now, should I be concerned about this type of tension?
Well, the truth is that whether you are an American retailer or a Japanese retailer, at the end of the day, if you're bringing things into this country, all the Americans are also manufacturing in the Far East. So regardless of the provenance of the brand, its products are mostly being manufactured overseas. So, I mean, 20, 30 years ago, in New York State alone, we had a few hundred factories. Obviously, over time, that has changed. So the industry of particularly fashion retail, but many others as well, have very much a big reliance upon Eastern sourcing. And so it's an issue that is really relatively important for them to focus on, and they are.
And focusing on the Asian market, Morty, I mean, we have seen this China slow down, this anti-corruption campaign kind of send a very chilling effect towards consumption in this region. I mean, we're starting to hear little cracks of that kind of breaking through, though, right? Prada saying that they're seeing a little bit of rebound. Tiffany's as well said they had strong growth in China. Are we hitting bottom here when it comes to this luxury demand in this region?
Interesting you say that. I mean, I believe that Kering, the big luxury conglomerate out of Europe, as well as LVMH Group, referenced the Asia, in particular China, comeback story for them, which happened relatively, almost violently. It just snapped back at the second half of last year, and is still continuing and maintaining that. So I think that even Burberry, and people have been, a little bit concerned about Burberry and whether or not they were losing momentum. They also had an interesting push recently. So I'm bullish for what they're doing, and they're also fueled by a luxury increase in the United States. And the United States isn't actually, per capita, the greatest luxury market in the world. It's 30% of GDP, but it's only 20% of the luxury industry. So the push here as well, coupled with the China, has been interesting, an interesting boost for them all.
Morty, appreciate it, but let's stick around, though. I'm more with Mortimer Singer joining us after this short break. Stay with us. This is Bloomberg.